I have the honor of introducing SC Moatti. If you Google her, you will learn three things. Number one, she is known as a new kind of investor. She founded Moatti Capital. She has been at it for 7 years, almost done with Fund 3. And Moatti Capital invests in B2B SaaS Series A. And number three, SC likes giving back, so she teaches investing and board governance at Stanford and Columbia. And that's where I met her. I'm delighted to invite SC on stage.
When I started Moatti Capital, I did that because I thought we had something different. And one of the really nerve-wracking part about being an investor is it's going to take 5 to 10 years before you know whether you're right or not. And so this year has been a very exciting year for us because finally, 7 years in, we're starting to see that actually there are a lot of things that we do right, and we now know that. We just don't think it's right. So the key takeaway is with the product-first approach that I'm going to tell you about, we're changing the way that most venture capital is done. And by that, I mean we're disrupting the power law. Who knows what the power law is? Few people. Okay. So the power law is saying when I make investments at early stage, the chances that they're going to be successful is very low. In fact, it's about 1 in 20. And so if I make about 20 investments, then I have a shot at having one winner. Well, with our approach, one investment in every 5 deals instead of 20. So it's like 4 times or so better than traditional venture capital. And so we take a product approach to everything we do. We have spent a lot of time trying to understand how we got there. And so the key is really 3 things. One is, with a product-first approach, we're going to pick more winners. 2 is, we're going to win the good deals more often. And 3 is, when we get in and we are investors, we add more value than just the investment. As a result of that, these are some of the investments we've made over the last 7 years. So 3 of them are already public. Amplitude, DigitalOcean, Airbnb, and then an additional 4 are in the making. You may recognize some of those names. Grok has been in the news a lot lately. And that's 7 out of a total of 30, not a total of 100 or 150. So I want to unpack that. So how we pick winners. It's well known that venture capitalists aren't innovators, right? They're like suits. So if you try to predict the future as a venture capitalist, then you're not going to pick a lot of winners. But if you rely on 500,000 product managers who are all innovators, who are all building the future, who have roadmaps that are inventing what comes next, and you rely on their signal, then you can actually have a better shot at predicting the trends that are going to be coming up. So that's exactly what we do here. We do look at that large community of 500,000 product managers, and we poll them all the time, say, please nominate products that you find innovative, products that you find interesting. And this year, we've done it 7 years in a row, we received 6,000 nominations. By the way, AI is the big theme of the day. 4,000 of those 6,000 were AI companies, so 67%. Last year, only 20% were AI companies. And the year before, we don't know because we weren't really tracking AI that much. So 6,000 companies that we put in front of our advisory board. Our advisory board is a few thousand chief product officers, VP of products across industry, across geography, who have roadmaps, who have teams, who have budgets, who have business priorities. And they tell us like, oh, that company is interesting. That group of company is like a trend that we're watching, and so on and so forth. And every quarter, we publish some of the key trends that we're excited about when it comes to innovation and early stage investing. So because we have an approach that's so bottomed up and so close to what's actually happening in technology and innovation, we're able to pick more winners. Now, the second part, the second part is how we help them be more successful. And I sort of grouped together how we help them and why we win more often, because it's essentially the same thing. If you can prove to an entrepreneur that when they take one of your dollars versus one of Sequoia's or any of the old dinosaurs' dollars, they're going to be better off, then you're more likely to win the deal. So how we help them is we basically say, well, can you make use of 500,000 product managers? And the answer is almost always yes. And here's why. The reason why is that today, most entrepreneurs, how many entrepreneurs are here in the room? I already spoke. Okay, amazing. Okay, so I'm going to see a lot of heads nodding, I think. Most entrepreneurs are asking themselves, how do I sell more? How do I sell faster? Because when you look at the traditional B2B go-to-market, it doesn't work anymore. Right? People used to go to the office, now they don't. So cold calling, dead. People used to read emails, now they get 500 AI-generated emails every day in their inbox. They don't read them anymore. And so when you're an entrepreneur and you're trying to generate leads, you can't call your prospects, you can't email your prospects, so what can you do? What we offer is a distribution platform that's essentially product first. We help them position their product so that it moves from being a product, right, a tool or a technology or a software, to a well-positioned way that you solve a problem for a customer. We put that offering in front of 500,000 potential buyers because technology products are bought by product managers in most corporations. And by doing that, we're going to actually help them, I'm going to quote a few of our entrepreneurs, accelerate their sales cycle by 30%, generate millions of dollars in revenue. When we invest, they have 1, maybe 2 million in revenue, so multiple millions is a lot of value for them. We help them enter new verticals so they can have more prospects and expand their market. And they'll tell us, oh, best value for the dollar invested, because it comes with not just dollars, it comes with execution, distribution power. So that's how we change disrupt the power law. Now, it only works if you're selling a great product. And here's why. It's really simple. Product managers build products. If you want to sell to a product manager, you have to have a great product, because that's how they're going to become champions of your company and your product. And so I want to spend a little bit of time helping entrepreneurs take advantage of, possibly the product first approach that we're advocating, and share with you some of my thoughts on what it takes to build a great product. This is based on tens of thousands of interviews of members of our community. This is based on my own experience as an entrepreneur and product managers before being an investor. I wrote a book about about building a great product. So it's very much data-driven, but at the same time, what I learned from all these tens of thousands of discussions is that really great products, whether they're B2B or B2C, they're here to make us better people, right? Technology is literally an extension of ourselves. So if we think about what makes a great product, we have to think about what makes a great person. So I describe that with sort of a mind, body, spirit framework. And if we start with mind, and we're going to apply that to AI, by the way. We start with mind, and there we go. When I think of mind in AI, I think of the very early version of AI. I think of IBM Watson. And you'll notice here, like IBM Watson is still very much a robot, right? It's a mind because it solves problems that have never been solved before. So we're still sort of in the early innings of AI. Any idea when Watson was launched? If you want to say how many years, just say a few numbers. 20, 15, yeah, 15 is the number. So 15 years ago is when really that AI revolution takes a little bit center stage. Any idea, and so from here to OpenAI, which is sort of the next big wave, it's about 13 years. Any idea how long that cycle was in mobile? Like from the very first, big bulky phone to the first sort of cell phone. Any idea how many years? 6. So the mobile revolution was a much faster cycle than the AI revolution. And any idea who that first bulky phone was from? Zach Morris. And what firm? What's the firm? Motorola is phase 2. The first one is also IBM with Simon. IBM Simon was that big bulky thing, just like IBM Watson is that kind of robot-y AI thing. Okay. So here are some things that I see here in that sort of solving complex problem area. I already told you, like we got 6,000 nominations for our product awards, 4,000 of them are AI. And it's awesome, but the majority of those 4,000 are focused on solving smaller problems. Problems like productivity, problem like efficiency. I would love to see more entrepreneurs solve problems that are like massive, problems that cannot be solved without AI. Here are a few examples. I'm sure there are many more. The first one is drug discovery. And here in San Diego, I think there's an amazing opportunity to have some fantastic innovation and disruption in that field. The second one is loneliness. And I don't mean just dating, I mean older people needing a companion. I mean sort of that, the good side of the movie Her, right? AI is a perfect solution for something like that cannot be solved without it. And then the third one is self-driving cars, right? Like solved with AI. So there are probably many more big problems, but I'm not yet seeing those big problems being solved in AI, which is expected because everybody's kind of learning how it works. But if you're an entrepreneur today, I would encourage you to tackle one of those massive problems. Okay, the second phase, right, the second rule of great products is beauty. And the idea here is everybody wants to look good. And so we also are looking for technology that is beautiful. And beauty is not like pretty pictures. Beauty is efficiency. Beauty is a wow factor. And so how that plays out in AI is really with OpenAI. OpenAI, when you interact with it, it's really beautiful. It's seamless. It's impressive. So there's that efficiency, that wow factor. There's something missing, though. How would you qualify it? Anybody wants to give it a shot at it? What's missing when you interact with OpenAI or ChatGPT? Lying, like hallucinations, yes. Emotions, exactly. That's exactly the missing piece, right? It's like, it's not a robot, it's kind of like a human, but it says really dumb things sometimes, right? So it's not quite a human. And so that leads me to, oh, sorry, before I get there, I'll come back to that. That leads me to my third wave. The third wave is the one that I hope you're going to be inventing, which is how to personalize AI, how to give it meaning. And if I think of, like, it has yet to be invented, so, okay. It has yet to be invented, so it's really up to you. But you want to think of it as the iPhone of AI, right? We talked about IBM Simon, the very kind of clunky one. We talked about like Motorola or Nokia, which is super easy to use, but still missing something. And then all of a sudden, the iPhone comes about, and it's completely personalized, right? You can look at it forever. You almost fall in love with it. That's the mobile era. But then in the AI era, that iPhone experience that's so personalized, so beautiful, has yet to be invented. Maybe there are some people in this room who will invent it. So let me go back now. Oops. There we go. I think oh, it's the computer here. Okay. Thank you. All right, so what are some of the issues with OpenAI right now? Like, we're in a hype cycle, and the question I hear all the time is, when is it going to stop? So I see two risks. The first one is, like the most visible example is the lawsuit between OpenAI and the New York Times, or Scarlett Johansson right now, who's saying, like, you're using my content, you're using my identity, and that's not okay. So the view of Silicon Valley, where I'm from, is it's totally okay. It's, you know, by law, nothing's restricting me from using data to train my AI. But at the same time, we all know that people value content, people value media. They're willing to pay to go see a movie with Scarlett Johansson. They're willing to pay to subscribe to the New York Times. So we know there's value that people find, and especially in a world where there's more and more fake news, right? We don't want to be in a world where everything is fake, or maybe we want, but we want to control that we're in a fake environment, as in AR, VR, where kind of everything can be okay. But in our real world, we value truth, we value identity. And so, to me, what's happening right now with OpenAI is similar to what happened in the Napster era, where Napster was a massive success initially because it made music available for free to everybody. But then at some point, all the record labels said, actually, we're not going to allow this to happen. We're going to pull our content away from Napster. And Napster without great music is not a great experience. And so Napster had to crash and burn for the Spotify of the world to, you know, emerge and exist. By the way, do you know who this band is? Okay, thank you. Okay, some people are paying attention. Okay, so the question is OpenAI going to be like Napster, right? Crash and burn to make room for a new kind of generation of AI? Or are they going to, you know, sort of adjust and change their business model to work with those content providers? So that's one big risk, which means one big opportunity for the entrepreneurs in the room. Another opportunity is related to, so I'm calling that Sarbanes-Oxley. Anybody knows what Sarbanes-Oxley is? Few people. Sarbanes-Oxley is regulation. Now, do I think that AI is going to be regulated? Like, I put a reminder in my calendar for that in about 13 years. I don't think it's going to happen anytime soon. However, what this is referring to is Sarbanes-Oxley was created because at that time, about 20-something years ago, some companies were buying artificially from one another. Hey, I'll buy you this stuff, and you'll buy me that stuff. We don't really plan on using that stuff, but it's going to increase our revenue. So it's an artificial way to increase revenue. And Sarbanes-Oxley came in to say, you can't do that if you're a corporation. You can't artificially buy from one another and call that revenue, and then it's actually not really used. That's happening right now between the cloud providers and all the AI companies. And what's happening is cloud providers are saying, I'm going to give you my cloud credits for free, and you're going to spend them on my platform. So it's all free, but I still get to recognize the revenue because essentially I'm still getting usage out of it. It's the same sort of artificial way to create revenue. At some point, that music is going to stop. And so this is really a message for entrepreneurs. Like, if your unit economics aren't going to be adding up once that music stops, it's going to be really difficult to have a viable business. And so that's a risk on any AI company that you want to keep in mind. And I think I have just 1 minute, so I'll wrap up. There we go. So now it's your turn. And my recommendation for you, in summary, go with investors that are going to be adding value. Tackle a massive problem that only AI can solve. Beware of the risk and take the opportunity that AI is going to actually provide services and personalized opportunities that couldn't be offered before, like without AI, right? Couldn't be fathomed or solved without AI.